Hello and welcome back to a new video from Cryptonaut to the Moon. In a statement on X on February 18, 2025, Vivek Ramaswamy, the former 2024 presidential candidate and former Doge lead, declared that the end of monetary easing tactics will force companies, governments, and investors to recalibrate risk assessments. Now that the era of easy money is over, companies and other institutions will have to rethink their hurdle rates for internal capital investment, he said. Ramaswamy added, Bitcoin is likely to become a more common corporate treasury holding in that environment. Interesting trend to watch. With the U.S. Federal Reserve maintaining benchmark rates under President Donald Trump's second term, corporations are increasingly eyeing Bitcoin as a treasury reserve asset. Many of these companies have seen strategies long success in leveraging Bitcoin as a corporate treasury standard. Ramaswamy, a longtime Bitcoin advocate, views BTC as a hedge against long-term economic risks, such as inflation and restrictive monetary policies. A few people on X replied to Ramaswamy's latest take on Bitcoin. Co-founder and co-host of the Investors podcast, Preston Pysh, agreed with Ramaswamy. 100%, Pysh responded. The amount of Bitcoin the company can acquire and hold long-term, compared to the amount that they already have on their balance sheet, is the new EPS. The smart ones are already publishing this metric, MSTR, Metaplanet, etc. One X-respondent countered with a maritime metaphor, declaring, Bitcoin is the tide that raises all ships. It's sink or swim time for all companies. No point in holding toxic sludge on your balance sheet that get debased over time. Framing corporate survival as a test of monetary agility. Meanwhile, supporters applauded Ramaswamy's thesis, with a user applauding, Thank you for helping the US and the world usher into a more positive and hopeful place, powered by Bitcoin. Casting the cryptocurrency as a linchpin of forward-thinking economics. Public institutions recalibrating investment thresholds distills a critical truth. In a world without cheap capital, projects, once deemed viable, may collapse under higher financing costs. Elevating hurdle rates forces selectivity, prioritizing ventures with demonstrable returns while embracing Bitcoin's scarcity as insulation against debasement. It might not be just mere accounting. It could very well be a survival blueprint for navigating monetary austerity with strategic clarity. Until next time, to the moon.